Today is a good day in the stock markets, and we've got an interesting video ahead. We're going to evaluate the Magnificent Seven's performance and compare them based on 3 key correction rules. We'll also give you updates on recent trades involving Apple, Tesla, Amazon, and Nvidia. Plus, we'll discuss the insights of a respected analyst regarding inflation, especially in light of the upcoming event where the Fed's Powell will speak at Jackson Hole. This should help us gauge how hawkish the Fed might be.
Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys.
First, Apple. It hit our target of $180, but then it dipped below. Watch closely because $180 is a crucial level that Apple will likely interact with over the next few days. Next, Tesla. It retraced to the $230 level, which I previously mentioned as a support and resistance point. If you'd been tracking this level and noticed the bounce, it would have been another buying opportunity. It emphasizes why we pay attention to support and resistance. Now, Amazon. I'm bullish on Amazon, but there's a resistance zone at $136. If we break above and close on the daily chart above $136, that's a strong signal for an upward trend. Keep an eye on how Amazon behaves around this price point. Remember, it was a tough barrier before, and we'll need to overcome it again. If we succeed, we're likely headed for $146. If not, we might revisit the lows. Let's talk about Peter Schiff, an analyst whose views on inflation are worth considering ahead of the Jackson Hole event. Peter Schiff is a well-known stockbroker and financial commentator. He's notably a strong advocate for gold and has reservations about Bitcoin, partly because it's often referred to as digital gold and could challenge traditional gold investments. However, what sets Schiff apart is his expertise in chart analysis, particularly when it comes to inflation. In a recent article, he voiced his concerns about the Federal Reserve's policies over the last 2 decades, which he believes have damaged the economy and set the stage for potentially severe consequences. Schiff is emphatic that the Fed won't be able to effectively combat inflation, despite the market's optimism about the Fed's ability to do so. In simple terms, Schiff is worried that we're already too deep into a situation where inflation is difficult to control. He suggests that the current Fed funds rate of 5.5% might not be sufficient, and that we might need to raise interest rates even higher. His stark warning is that the market's expectation of rate cuts in 2023 is unrealistic. Fed Chair Powell is signaling that the economy is blazing hot, moving ahead at full steam. He's not planning to lower interest rates. In fact, he might raise them. This could explain why we keep hearing more hawkish tones from the Fed. I've been talking about it for a while. We're headed for a banking crisis and a credit crunch. The Fed is in a tough spot, fighting inflation by increasing rates. The more they do this, the more pressure it puts on banks, potentially leading to a severe credit crunch. Unfortunately, it's the average person, like you and me, who will feel the brunt of it. I know this sounds gloomy, but it's essential to balance our optimism, especially on a good day like today, when we're eager to hear what Powell has to say. We need to remember that we're still grappling with inflation. The Fed has a target of getting it down to 2%. All right, let's dive into some interesting analysis. I'm going to share 3 key rules of technical analysis, and we'll apply them to the Magnificent 7, or rather, the Magnificent 8, including Netflix. These rules will help us figure out which stocks are performing well and which might be in trouble. Rule 1. Bucking the trend. First off, we want to see which stocks are going against the flow. In other words, which ones are not following the general market trend. Rule 2. Down the least. Next, we'll look at which stocks have experienced the least decline in their prices. Rule 3. First to move. Finally, we'll identify stocks that are among the first to make significant moves. Now, let's categorize these stocks. Elite stocks. These are the stars of the show. They not only surpassed their all-time highs in 2021, but also reversed and exceeded their local highs in 2022. We've got Apple, Microsoft, and Nvidia in this group. These stocks didn't quite hit their all-time highs from 2021, but they did manage to surpass their local highs from 2022. Google, Meta, and Netflix fall into this category. By applying these rules, we can gauge which stocks have been exceptional performers and which have shown strong resilience in the market. Now, we've got what I call the C rating stocks. These are the stocks that haven't managed to reverse their downtrend from 2022, because they haven't risen above their local highs in 2022. Now, here's the concern. If they can't surpass their local high set in 2022, there's a real possibility that these stocks could potentially hit new lower lows in 2023 or 2024. So, we need to be cautious with them and watch closely to see if they eventually break above their local highs this year, because they haven't done that yet. I'm giving a C rating to Amazon and Tesla. You know that Amazon and Tesla have been two of my biggest and most profitable trades this year, but I need to use my disciplined approach to evaluate which of these stocks is performing the best and whether they're still winners in the days ahead. So, Amazon needs to rise above $146, and so far in 2023, it hasn't done that. Tesla is in the same boat, getting a C rating because it's below $315, which was its 2022 high. We haven't surpassed that yet, and it's a significant concern. But let's pause here because we're going to revisit these stocks and see if they shine in other categories, even if they didn't win in the first one. Now, let's tackle two categories together: stocks down the least and stocks first to move. Starting with the elite stocks, Apple, Microsoft, and Nvidia. Out of these, Apple experienced the least drop, only falling by 13.25%. Microsoft came next with a drop of around 15.06%, roughly 15%, and Nvidia was just a bit more at 15.81%. So, among the elite stocks, Apple performed the best in terms of the least decline. In the top stock category, a bit of a surprise here, Google took the lead as the stock that has fallen the least. It had a pullback of only 5.27%, which is basically close to 5%. It performed better than all the other top stocks in this regard. Let's break down what we found. First, we looked at stocks that bucked the trend, which included Apple, Microsoft, and Nvidia. Then, we checked which stocks fell the least. In this category, Apple, Google, and Amazon stood out. Finally, we examined stocks that were the first to make moves. Tesla, Nvidia, and Google were the leaders here. Now, let's talk about Meta and Netflix. Meta had a significant pullback, dropping about 15.89%, almost 16%. Netflix, on the other hand, had an even steeper drop, nearly 18%, or more precisely, 17.91% before it started moving back up. So, in this category, Google performed the best, followed by Meta, then Netflix. Now, let's revisit the C-rated stocks. Amazon, despite not beating its local high in 2022, had a relatively small pullback of only 8.69%, which is roughly 9%. So, Amazon becomes more interesting in this context. Even though it got a C rating in the first category, it earns an A rating for falling the least. Now, let's talk about Tesla. It's in the C-rated category because it hasn't surpassed its 2022 local high. However, in terms of how much it pulled back, Tesla had the most significant drop, at 29.05%. This is a concerning factor for Tesla's status as a top or elite stock. To sum up our rules, for stocks bucking the trend, Apple, Microsoft, and Nvidia led the way. For stocks falling the least, Apple, Google, and Amazon performed the best. And for stocks first to move, Tesla, Nvidia, and Google were the pioneers.